Welcome to RCFE Deal Room. I'm Dale Corpus. If you're buying, selling, or investing in residential care facilities for the elderly in California, this channel is designed to help you make smarter decisions and avoid costly mistakes. In our last episode, we talked about how much cash you really need to buy in RCFE. Today, I want to answer the natural next question. How do people actually finance in RCFE? This is one of the most misunderstood parts of buying in RCFE. Many buyers assume there's only one way to finance a transaction. That's simply not true. Depending on the deal, there may be several financing options available. Some buyers use SBA financing, some use conventional financing, some negotiate seller financing, some combine multiple financing sources into one transaction. Every deal is different. Today, I want to give you a high-level overview of the most common financing options so you'll better understand the conversations you'll eventually have with your lender and your advisory team. Let's get started. Number one, financing starts before you find the right RCFE. One mistake I see buyers make is waiting until they found the perfect RCFE before speaking with a lender. I actually recommend the opposite. Meet with the lender first, understand your purchasing power, learn what documentation you'll need, discuss possible financing options, understand your budget. Knowing what you can realistically afford makes your search much more productive. It also gives you credibility when you're ready to make an offer. Number two, SBA financing. One of the most common financing options buyers hear about is the SBA loan. The Small Business Administration doesn't lend money directly. Instead, qualified lenders make the loan, and the SBA provides certain guarantees that can make financing possible for eligible borrowers. SBA financing is commonly used for business acquisitions, including many RCFE transactions. Depending on the transaction, SBA financing may potentially be used when purchasing the operating business, the real estate, or both together. Every lender has its own underwriting guidelines. Every borrower has a different financial profile, and every transaction is unique. That's why it's important to speak directly with an experienced SBA lender who understands healthcare and senior housing businesses. Number three, conventional financing. Another option is conventional financing. These loans are typically made directly through banks or other financial institutions without SBA backing. Some buyers prefer conventional financing because it may better fit their particular financial situation or investment strategy. Depending on the lender, conventional financing may have different qualification requirements than SBA financing. The best option depends on the specific transaction, your financial profile, and the lender's programs. There isn't one loan that's automatically better. There's simply the loan that's the best fit for your situation. Number four, seller financing. One financing option that buyers sometimes overlook is seller financing. This is where the seller agrees to finance a portion of the purchase price instead of receiving all of the proceeds at closing. Not every seller is interested in doing this, but when it happens, seller financing can create flexibility for both parties. Sometimes it helps bridge a valuation gap. Sometimes it reduces the buyer's upfront cash requirement. Sometimes it helps structure a transaction that otherwise wouldn't work. Seller financing can also demonstrate that the seller has confidence in the ongoing success of the business. Every agreement is negotiated differently. That's why experienced legal and financial guidance is so important. Number five, some deals use multiple financing sources. Many people think every transaction uses only one loan. In reality, some RCFE acquisitions combine multiple funding sources. For example, buyer cash, a commercial loan, seller financing, partner capital, or private investment. Think of financing like building a puzzle. Different pieces may come together to complete the transaction. The structure depends on the needs of the buyer, the seller, and the lender. Number six, lenders look at more than the property. Many first-time buyers think lenders only care about the building. They don't. They're also evaluating the business, the borrower's financial profile, cash flow, experience, management capability, the overall strength of the opportunity. Every lender evaluates risk. The stronger the overall picture, the easier it becomes to have productive financing conversations. Number seven, get your financial documents organized early. The financing process moves much more smoothly when buyers are organized. Before applying, begin gathering documents such as financial statements, tax returns, personal financial information, business information, bank statements, organizational documents, and any additional information your lender requests. Being prepared often saves weeks during underwriting. Organization creates confidence, not only for lenders, but also for sellers. Number 8, don't shop only for the lowest interest rate. One mistake I occasionally see is buyers focusing only on the interest rate. Of course, the rate matters, but it's only one part of the overall financing package. Also consider loan terms, down payment requirements, prepayment provisions, closing timeline, lender experience, responsiveness, and whether the lender understands RCFE transactions. Sometimes the cheapest loan isn't the best loan. Sometimes working with the right lender creates a much smoother transaction. And here's a bonus for you. Financing is only part of the investment. Even after financing is approved, remember what we discussed in the previous episode? You still need working capital, payroll reserves, transition costs, emergency reserves, repairs, and operating cash. Getting approved for financing doesn't automatically mean you're financially prepared to own the business. Buying the RCFE is just the beginning. Operating it successfully is the long-term goal. Now, here's today's deal room tip. Before submitting an offer, have a conversation with your lender and ask, if we find the right RCFE tomorrow, how quickly could we realistically move? That question helps identify missing documentation long before you're under contract. Being prepared often makes you a much stronger buyer. If I could leave buyers with one piece of advice on this episode, it's going to be this. Don't try to force every transaction into the same financing box. Every RCFE is different. Every seller is different. Every lender is different. The financing strategy should fit the transaction, not the other way around. Surround yourself with experienced professionals who understand RCFE acquisitions. Ask questions early. Stay organized, and don't wait until you've fallen in love with the property before understanding how you'll pay for it. If there's one thing I hope you take away from today's episode, it's this. There isn't one financing solution that works for every RCFE purchase. Some buyers use SBA financing, some use conventional financing, some negotiate seller financing, and some combine several sources together. The right solution depends on your financial situation, the structure of the transaction, and the business you're buying. If you're considering purchasing an RCFE in California and you'd like to better understand how financing fits into the buying process, I'd be happy to have a confidential conversation. Even if you're still early in your search, getting educated today can help you make better decisions tomorrow. Even if you never work with me, I hope these videos help you make better decisions. That's why I created RCFE Deal Room. If you'd like additional educational resources for RCFE buyers, sellers, and investors, visit simplifyseniortransitions.com/RCFE. There you'll find educational videos, tools, and my free RCFE buyer's due diligence checklist. If you found today's episode helpful, I'd really appreciate it if you'd subscribe, and I'd love to hear from you. If you were buying an RCFE today, which financing option would you want to learn more about? SBA financing, conventional financing, or seller financing? Leave your answer in the comments below. I read every comment, and many future episodes are inspired by your questions. Next time, we'll switch back to the seller side and discuss 7 things buyers notice in the first 15 minutes of touring your RCFE. Thanks so much for watching. I'm Dale Corpus, and I'll see you next time here on RCFE Deal Room.